Welcome back, investors. Jake here. In this video, let's talk about a new position that I'm taking in my Schwab accounts by purchasing long calls. Currently, I'm sitting on about $16,000 in cash, researching various stocks to take a position in. And in this video, I want to talk about the company Texas Instruments. I feel like most people are familiar with this company because in high school or college, maybe they had to buy one of their calculators. Lots of fond memories here with my TI-83 Plus from college. Now, Texas Instruments is a manufacturer of semiconductors and integrated circuits. One of the big financial stories of this past year is the shortage of semiconductors, of chips. Automakers and other companies and industries can't get enough of them, and the producers can't make them fast enough. They're also restricted by their own supply chain issues. But Texas Instruments is a very well-run, well-managed company. It's one of the top 10 semiconductor manufacturers in the world by sales. They focus on analog chips and embedded processors. Their products go into calculators, microcontrollers, and multi-core processors. When you visit their investor relations page on their website, it's very impressive what they've done for their shareholders over the last 16 years. Free cash flow per share, 12% annual growth averaged over 16 years. Dividend growth, 18 consecutive years of increasing their dividends. And this is the most important one, but share count reduction. They use the profits from their company to buy back company stock to increase your value of your shares. A 46% reduction over the last 16 years. That is very impressive for a company to do. So when we look at their share price going back a while, it's pretty funny how overvalued the company got during the 2000 dot-com bubble. It reached $87 a share. It then crashed along with all the other tech stocks. And it actually didn't recover until 2017. However, in the last 5 years, very impressive, it's up 159%. We're going to get into the technicals, but it's the technicals of Texas Instruments that's giving me the impression that the share price at some point in the next 6 months or so probably will take off again. But before we go in depth on their technicals, let's first review their financials, and we're on macrotrends.net. If you want to look at their revenue, this company over the last 16 years didn't have impressive revenue growth. It was pretty flat in this $3 billion a quarter, $4 billion a quarter range. However, in the last 4 months, you can see they have been experiencing growth. Once again, they're probably having to charge more for their chips because they're in such high demand. So the last 4 quarters, they have had impressive revenue growth, which has driven their share price up in the short term. But I don't see this slowing down in the near term. The most recent quarter, there was kind of a pullback, not as much growth. They stated it was supply chain issues, but if they can resolve that, their profitability looks really good. So let's check out, this is amazing. Let's check out their net income. How profitable are they each quarter? And they have not had a negative quarter going all the way back to 2005. Not one quarter in which they lost money. Once again, a very well-managed company. They take their investor relations pretty serious. But here we go. Shares outstanding. This is the one that is just bonkers to me. They take profits from their company and they buy back company stock. Now, it looks like they increased it a little bit here and here for whatever reason, but over the long term, Texas Instruments returns the company profits to their investors by buying back shares, increasing the dividends. So this is a very well-respected, well-popular stock. Let's look at the price ratios now to see what is it currently being valued at compared to its history. And when we look at their price to earnings, it's currently at 24. You could argue, I mean, compared to the market, guys, 24 is a steal. It was 28 6 months ago when it made a huge run up. It hit 26, back in 2017. What can we compare Texas Instruments to? And you could go with more traditional, slower growing companies like Broadcom or Qualcomm or Intel. But let's go ahead for fun and compare it against NVIDIA and the crazy things that NVIDIA has been doing this year. So let's look at NVIDIA's revenue growth, which is what's been causing their share price to go crazy. But let's look at their price ratios. Let's compare what are you getting when you buy Texas Instruments versus what are you getting when you buy a higher growth company like NVIDIA. And NVIDIA's price to earnings is currently 107. It's valued 4 times greater based on their earnings than Texas Instruments. Now, yes, NVIDIA is growing a little bit faster than Texas Instruments, but 4 times more? I think Texas Instruments is more appropriately valued compared to NVIDIA. But let's look at some other metrics here, and let's go to price to free cash flow. What is NVIDIA being valued at? 113. Once again, lower is better. Let's check out price to free cash flow for Texas Instruments. What did we say NVIDIA was? It was 113. Texas Instruments is currently at 24. These are pretty good P to E and price to free cash flow ratios considering how overvalued everything in the market is right now. So I think Texas Instruments fundamentals are solid. I don't see much downside risk here for taking a position in this stock at this time. So let's go on Charles Schwab and I'll show you what I see concerning the technicals. And the technicals, in my opinion, look pretty good. So let's zoom in here and get the charts how we want it looking. Let's switch this to candlesticks. And all the semiconductor stocks and Texas Instruments ran up huge at the end of 2020. Very strong uptrends, but as soon as it hit a nice round number, well, actually 195 here. So we'll notice that the first line of resistance that Texas Instruments hit was this 195 range. So this is an important number. And then it bounced off and it went down to about 175, came back up, and it's been experiencing support ever since May or June, basically at this 185 range. So currently Texas Instruments is at 188, and there's a strong level of support at 185. So taking a position now, I don't really feel like there's much downside risk. If there was a sell-off or a newsworthy event, there would be buyers who would step in here at 175. This seems to be another level of support. We'll just mark this right here. So what is the upper range? And Texas Instruments has broken 200 a couple times, but at this point, sellers step in and it goes back down. So my argument is eventually this stock is going to break through 200 and go up. What could cause that? Well, let's add a technical indicator here, and we'll add the simple moving averages lines. This is what is getting me pretty excited about this stock. So this yellow mustard color is the 20-day, the orange is the 50-day moving average, and this gray line is the 200-day moving average. When stocks just kind of get ahead of themselves, like when it shot up to 200, often they'll enter these channels, these ranges of consolidation, until the 200-day moving average catches up. And the 200 just caught up basically this week. So at some point, it could keep channeling for a little bit, but I don't see much downside risk. I think buyers will step in because the 200-day is caught up. Perhaps a trigger event will be in earnings reports. So let's add the earnings here. Now, actually, Texas Instruments looks like it sells off on earnings, which is probably not what you want to hear. But here was an earnings report. They beat earnings per share by 22%. There was a sell-off. Here, they beat earnings per share by 18%. There was a sell-off. Here, they beat by 11%. There was a sell-off the day before, or yep, there was kind of a sell-off. And then again, let's see here. Let's scroll up. Then again on this was what was the date of this? I can't. Let's see here. It was October 26th, so this was almost a month ago. A huge sell-off on earnings, huge gap down, and it almost filled and then it pulled back. I think according to the technicals, this is a good point to purchase. I don't think this stock is overvalued. I don't see much downside risk, and just with the narrative of the semiconductors being in demand, they can raise their prices, assuming they can get their supply chain issues in order. Texas Instruments should go up at some point in the next 6 months or a year, so I'm looking to buy a long call to capture that eventual price movement. So let's head over to the option chain and I'll just show you guys how I do this. For expiration date, I'm going to go with January of 2023. So this is 429 days in the future. And when I purchase my contracts, I always go just at the money. Texas Instruments is currently 188, so I'm going to choose a strike of 190. The bid-ask spread is a little wide because Texas Instruments isn't a heavily traded stock for options. Open interest is 646. I do like this 190 strike though, and my break even, if we just assume that I'm going to get filled where the sellers are asking, you add this premium you're paying to the strike, my break even is 209.95. Can Texas Instruments by January 20th, 2023 be above 209.95? I think it will. However, I don't intend to keep it this long. Eventually Texas Instruments will break through this $200 barrier. It'll go to a nice round number, maybe 220, 230, 225, 250, and then start channeling sideways again. Once it does that, I'm just going to sell to close these contracts. I don't intend to hold it for an entire year. I don't know when the stock is going to take off in the next couple months, but I would rather just buy the long calls now and then capture that eventual price movement because I think it's coming. So let's go with a strike of 190 and fill this order. If I wasn't filming this video for you guys, I probably would do a limit order at 1950 and then try and get it filled. I would just wait a couple hours and see if it would fill. But because I'm filming this for you guys, I want to see it filled right away, so we'll just go with a market order. I'll just go with where the sellers are asking at 1985. And what kind of position do I want to take in this? I don't think I want to do 3 contracts for basically $6,000. I'll just do 2 for a cost basis of $3,970. Works for me. Let's go ahead and get this filled. Okay, we're back on my accounts page, and here we have, I bought to open 2 long calls with an expiration date of January 20th, 2023 with a strike of 190. My cost basis was 1936. That's actually not that bad. Schwab does sometimes do a good job of filling at a better fill price than just where the sellers are asking. So I'm pretty happy with that cost per share. And yeah, now all I have to do is just sit back and wait for Texas Instruments share price to eventually take off. As always, guys, I have to stick this in somewhere that I am not a financial advisor. This is not financial advice. Do your own research. Think for yourself. If you like these kinds of videos, though, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know in a comment down below. Love hearing from you guys. Till the next video, take care.